Federal crop insurance includes coverage options for many different commodities, from cattle to tomatoes. At the USDA Risk Management Agency, RMA, we make it our mission to serve the needs of all farmers and ranchers. Still, depending on what you grow, where, and what techniques you use, it is possible that your crop might not qualify for federal crop insurance. If that happens, don't give up. Talk to your crop insurance agent and ask about getting a written agreement, an exception to our standard rules, so you can still get the coverage you need. Your agent can advise you on your options, and if appropriate, they can help you gather the necessary documents and submit your request. To get a sense of what a written agreement can do for you, let's explore some common types, including XC, TP, and HR written agreements. Don't worry about those names. Your agent will help you determine which type of written agreement might be right for you. The first type, an XC written agreement, allows a farmer to get coverage for their crop using insurance data from a different county. When RMA calculates rates, we consider the history of eligible losses in the area, typically county. As a result, crop insurance premiums are higher in counties where losses happen more frequently. If a county can't provide enough of that historical data to allow us to make those calculations, then we can't approve the policy. But with an XC written agreement, we can use data from another county to calculate those rates and approve that coverage. Let's say you grow cranberries and you'd like to insure your crop. When you talk to your crop insurance agent, you learn that cranberry policies are not normally available in your county. But your agent also offers to help you submit a request for an XC written agreement. Working with the agent, you gather the required documentation and submit your request. And if RMA approves, you can get coverage for your cranberries using data from a nearby county instead. Type practice, TP written agreements aren't so different. Let's say you have a vineyard. You grow a certain type of grapes, and they're covered by federal crop insurance. But now you'd like to grow a different variety. Or maybe you'd like to try a new irrigation technique. Your crop insurance agent explains that policies for this new type or practice are not normally available in your county. But they help you submit a request for a TP written agreement. And again, if your request is approved, you'll be able to insure your crop using data from a nearby county. Finally, high-risk HR written agreements may come into play when your farm is in a high-risk area, for instance, a river valley prone to seasonal flooding. Your crop insurance agent explains that your policy will be more expensive because of the added risk. But maybe only part of your field is at an elevation that floods. Or maybe you've built levees or used other flood mitigation practices to reduce your risk. Again, your crop insurance agent can help you gather the required documentation and submit a request. RMA reviews your submission along with other information like satellite imagery to determine whether you qualify for a lower rate. Don't worry about the terminology here, XC, TP, HR. Just remember, a written agreement can help you obtain the coverage you need for your farm, even if that coverage is not ordinarily available in your county. Your crop insurance agent can help you put together the required documentation and submit a request to one of the RMA regional offices. And RMA will review your request and determine if you qualify for an exception. Your nearest regional office can also answer any questions you might have about crop insurance, provide experts for trainings and events in your area, and listen to any suggestions you might have to help improve federal crop insurance. To learn more, please visit rma.usda.gov or scan these QR codes with your phone to find your regional office and your crop insurance agent.